Today on GrowthShares, let's analyze and see whether UnitedHealth Group is a great long-term investment. UnitedHealth Group is an American multinational managed healthcare and insurance company. It offers healthcare products and insurance services. UnitedHealthcare Group is the world's 8th largest company by revenue and 2nd largest healthcare company behind CVS Health by revenue, and the largest insurance company by net premiums. UnitedHealthcare revenues comprise 80% of the group's overall revenue. I've arranged this analysis into 15 categories, each proportionally given different weights to signify their importance. Each category will be given a score of 1 through 7, with 1 being the worst and 7 being the best. At the end, I'll add them all up and the company will be given a final score 1 through 7. Along the way, I'll explain each category and their importance to the overall picture. The first category is price multiple, which accounts for 5% of a company's investment attributes. I look for companies with a PE ratio as low as possible, which indicates a company's stock price isn't trading at too much of a multiple to its earnings. For this, we use a trailing 12-month PE ratio. Its PE ratio is 27.58. Based on that, I give UnitedHealth a score of 5. The second category is growth, which accounts for 10%. I look for growth through a combination of past performance to create a reasonable projection of future growth. I consider a high growth rate to be excellent. Its forward growth is 17.1%. Based on that, I give UnitedHealth a score of 5. The third category are business margins, which accounts for 3% of what I look for in an investment. I take a look at gross margins, operating margins, and net profit margins to see how a company is utilizing its products and services along with the expenses it puts in. 20% or higher, I consider excellent. Its margins are 7.2%. Based on that, I give UnitedHealth a score of 3. The fourth category are investment returns, which accounts for 4%. I look at return on assets, equity, investment, and determine how the company has been utilizing the capital it's given to create a profitable or not profitable enterprise. The higher the percentage, the better. Its returns are 16.5%. Based on that, I give UnitedHealth a score of 6. The fifth category is debt, which accounts for 5% of a company's health. I look at how a company is utilizing its debt to fuel its growth and its daily operations. Too much debt may signal growth, but I see that as artificial growth and not something I would be too keen on when investing for the long term. My scale goes from 3+ to -3, with a higher number being preferred. Its natural utilization is 0.8. Based on that, I give UnitedHealth a score of 4. The sixth category is operational multiple, which accounts for 5%. I examine popular multiples such as price to book, to sale, to cash, and to free cash flow, and formulate a single number that encompasses all their strengths and weaknesses. The lower the number, the better. Its ratio is 15. Based on that, I give UnitedHealth a score of 1. The seventh category is stock performance, which accounts for 3% of what I look for in an investment. This is a comparison between leading competitors and the S&P 500 through multiple durations and ratio it out to construct a single number that represents how much better or worse the company's stock has performed over other investments. The higher the number, the better. Its performance is 2.9. Based on that, I give UnitedHealth a score of 6. The eighth category are technicals, which accounts for 4% of a company's overall profile. I look at relative strength index and the 200-day simple moving average to create an aggregate score to see how traders are looking at the company's stock in order to potentially see any opportunities to buy in or sell. The higher the number, the better. Its range is 8. Based on that, I give UnitedHealth a score of 4. The ninth category is short float, which accounts for 5%. I look at the short float to see what other investors are looking at when it comes to the present value of a company. I'm basically looking at what percentage of a company's outstanding shares are being shorted, presumably creating a downward pressure. The lower the percentage, the better for a company. Its short interest is 0.62%. Based on that, I give UnitedHealth a score of 6. The 10th category is Wall Street analysis, which accounts for 6% of a company's attributes. Others are looking at the company, and that's important because it sways investor sentiment. That shouldn't be discounted. When an analyst offers a buy or sell rating on a company, that has consequences. The higher the consensus on a buy, the better. Its buy recommendation is 100%. Based on that, I give UnitedHealth a score of 7. The 11th category is investment ownership, which accounts for 6%. I look for institutions who own a company because it signals that big players are partaking in a company's identity. This creates a safety net, as you're not the only concentrated fund in an investment. The higher the percentage, the safer the investment for everyday folks due to the large backstop. Its institutional ownership is 89.5%. Based on that, I give UnitedHealth a score of 7. The 12th category are dividends, which accounts for 2% for a company's profile. I believe a company that pays its shareholders are great investments with all things being equal. It shows it has the funds to reward investors aside from stock appreciation. The higher the dividend yield, the better.
UnitedHealth pays out a 1.19% dividend. Based on that, I give UnitedHealth a score of 5.
The 13th category is sustainability, which accounts for 2%. The ESG risk rating, which examines the environmental, social, and governance of a company, has been building steam, and investors are more likely to favor companies with a good ESG risk rating. The closer the number is to 0, the better it is for the company.
Its ESG risk rating is 17. Based on that, I give UnitedHealth a score of 5.
The 14th category is market dominance, which accounts for 10% of a company's prospects. I believe market dominance is how a company stays competitive going forward. I combine various attributes such as market share, sales, market cap, barrier to entry, and existing competitors. The more dominant a company is, the better.
It has primary market dominance. Based on that, I give UnitedHealth a score of 7.
And finally, the 15th category is fair value price, which accounts for 30% of what I look for in a company. A company can pass the other 14 categories, but if its stock price is too overvalued, it's not a good investment at that moment. I determine fair value price based on a discounted cash flow model with conservative projections, which creates a margin of safety. That price is then compared to the current stock price.
UnitedHealth's fair value price is $427.98 per share. UnitedHealth stock is considered overvalued. Based on that, I give UnitedHealth a score of 2.
Now that we have all 15 categories tallied, I'll add them all up proportionally, and this will give us our final score.
Based on my complete analysis of UnitedHealth, I give a final score of 4.3 out of 7, which means I think UnitedHealth is an average long-term investment.
I'll also show the price of the S&P 500 and perhaps a year from now make a comparison of which investment did better.
My investment approach focuses on the long term. It's just easier to forecast and predict over the course of 5 to 10 years as opposed to 6 months or even 6 minutes. I personally buy companies during a short period of time. I don't buy it all at once in one day. I usually take about 2 to 3 weeks, roughly 10 to 15 trading days, to build up a position. I'll figure what percentage of my portfolio I want to allocate to a single investment and then divide it by the number of days I'll be buying the stock. I'm a big believer in treating a stock like an actual company because, well, that's what they are. They're ownership in actual companies. The information I provide in this video and albeit in this channel can be found online and in most cases for free. What I do keep proprietary is the use of the information I found. With them, I figured them into these 15 filters, these metrics I went over in this video, and narrow it down to a single final score that simplifies and encompasses the true worth of an investment. And like these kinds of methodology, you may have a different approach to valuing a company. This is mine, and I found that it's worked for me. It might be or might not be the perfect fit for you. You may like more risk, more excitement, but I rather focus on what a company is all about. It comes down to providing a service and whether that service is good enough and priced attractively enough to buy. My research takes about a week to complete, and since numbers, news, and figures change all the time, I usually do my research the week prior to publishing. Prices are current as of the last trading day of the previous week, and the valuations are up to date for a while. If you made it this far, shoot me an email. I'd love to get in touch with you and talk more. If you want to see me analyze more companies, hit that like button, and don't forget to subscribe to my channel. And as always, take care of your money.